The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, as we start a Friday on quad witching. Or is it triple witching? It's quad witching. We're at 2046 on the S&P cash, basically up 6 points on the S&P cash. Volume had been very, very light until the European closed. Then we saw a ton of volume come in. But the indexes really didn't move that much. 3 billion shares as we start the show. And yesterday, I had some emails. In fact, I'm back at the Power Trading Hour studios today. So if you want to give me a call, you can at 877-927-6648. But you can also email me at path@tfnn.com. Got a few people that emailed me yesterday. Of course, wasn't able to read them until they came back. One of the first questions was, why did I think today was going to be a rather flat day? And that is because all the quad witchings have been, for the last 2.5 years? It's been pretty rare to see any kind of movement into quad witching. Seems to me like they sew everything up before it happens. I think trying to remember the biggest day that we've had in quad witching for the S&P movement, and they've all been rather small. Generally, it's those other non-quad or multiple expiration days that have a lot of action. As we go into the commodities, we're off $8 or $9 on gold. Silver's off like 16 cents. Probably the most interesting to a lot of traders is that crude is probably going to close below $40 on the J contract going into the weekend. Light and variable is probably the best way to describe it. Of course, every day we meet here between 2 and 3 p.m., but for the most part, it's just going to be a quiet day out here. Let's get everything kind of started here.
Then it's all just a little bit history repeating.
It is history repeating, and on this day in 1992, Chambers Development Company, one of the nation's hottest growth stocks, drops from $30 to $11, or about a 62% haircut. On news that the landfill company's accounting may be garbage. Maybe Tony Soprano was involved in that. The day before, Chambers announced it would no longer capitalize its development costs, wiping away $48 million in earnings. And 6 months later, Chambers restates its books for $89, $90, and 91, slashing its earnings for those years by $240 million. My dad had an interesting saying when I grew up. He said, figures don't lie, but liars can figure. And one of my more popular quotes, or the ones I like, is from Ian Griffiths. He was kind of a big trader. Every set of published accounts is based on books which have been gently cooked or completely roasted. And that's why probably keeping an eye on charts gives you a little heads up. Normally somebody knows something before everything goes in the turlet, as Archie Bunker would say. I like that show. Still one of the better shows. No way that anybody would ever let it on today, though. Not politically correct. Although they did everything to show how you could be a better human by showing a kind of a flawed one. But I don't know what else you can say. Archie. Still love that show. We've probably spent a lot of time talking about ESPN and how streaming on it is starting to affect its parent company, Disney. Starting to see some more blowback on that, and why you can't really make any money. It is, and more evidence is coming in that it is problematic. Even NPR's vice president this week said that you cannot talk about podcasts on any of the shows. You can't refer people to him. You can't do anything to him. And if you mention him, it can only be in news articles in a non-promotional manner. Man, I think him and the guy from Disney need to get together. The train's on. Everybody's on the train. You're sitting off to the side. NPR's been, its ratings are fairly low and getting lower every day. The people that used to listen to NPR are expiring at an alarming rate. The problem also is with the proliferation of podcasts. The once fairly narrow cast that NPR had with several of its programs have found its way to YouTube and many other places. The question is, how much longer would a NPR actually be necessary? And of course, who could miss all the sight gags and, of course, comedy routines on Saturday Night Live of NPR hosts? There's a reason why they do that. Most of the people do kind of talk in bloviating and hushed voices, many times trying to overly dramatize what they do. Europe's closes were not all that exciting today. Spain was probably the most interesting. The Irish, a little luck of the Irish, they were up higher. Probably the interesting thing to me, everybody probably knows this. I don't know. I haven't heard it brought up this week too much other than on CNBC, and that is, of course, that expirations all this week market closes for Europe have been, of course, an hour later. And I really forgot to bring this up on Monday. I was going to, but of course, that will continue through Sunday, March 27th. So when we come back the 28th, be prepared that we will be back to where the European markets close at 11:30 Eastern time, and we'll kind of be back to the way things have been. But like I said today, a great deal of volume coming in right at the European close. I don't think that that is a coincidence, but kind of a movement. We got the dollar index up 20 cents. We're back in the 95 handles, as they like to say on the street. 95.03 on the continuous contract. And kind of just a quiet move. Now, I've got a couple other things here. Maybe I bring it up in some of these other slides. Google is selling its robot division. It bought it just a few years ago. But kind of interesting in the fact that most of the reasons that they're getting rid of it, at least according to what insiders at Google say, is one, it didn't make money, which hasn't been a big issue before. But more important, its engineers did not get along with the rest of the people at Googlers. The engineers in the robot division know where the cash is, and that cash is in the military. And there's a lot of peaceniks around Silicon Valley who do not like anything even inkling close to military contracts. And it looked more and more like this was going to be a kind of a product for people that wanted to be in military contracts, as most of the stuff that they were developing, that was going to be their clients. They, of course, got a lot of money from ARPA and DARPA, and they're looking for people to buy it. Amazon at the top of the list. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And what do we have out here? I'm just looking through some of the other stuff to see if there's much going on. We'll take a look at a few of them. A few are out here bouncing. HOT, of course, has a offer with Marriott, and bouncing up a bit, about 5% today. The last high at 82.83. And what else do we have? Adobe had some earnings. It was up about 4%. I don't know if we can make a great deal about that. ADBE. Where's it at? Let me get this stuff figured out. Adobe app, 4%. It's not. I think it was up. 98, up on a high of 98 today. 93.58 as we speak. It kind of rolled off a little bit. I think there were a lot of shorts going into earnings. Up $3-4. No big deal. Volume at 9.4 million shares as we go in. So it's basically into this gap that started on the 4th of January. As we've been talking the last few days, a lot of stocks coming in to these gaps. Wasn't a lot of volume into these gap downs. On this one was just 3 million shares and 1.2 million shares and one. Never really had that big gap. One of the things I disliked up until today was the energy off the lows. This one really hadn't been dragging, had been dragging a little bit. I'm not really surprised to see it sell off of that 98 high so far today. What else? We looked at HOT, looked at Adobe. Get my other lists up here. CMG off 2.4%, down to 460 today. CMG, take a quick look at that. See, I think we talked about this earlier in the week. You got a kind of a high volume low. Certainly the news hasn't been any better on this one lately. And yeah, you're 460, so no big deal out here. But there's probably the first opportunity to buy this on the dip is this gap up when it came up off the volume, and that was on the 14th of February. This popped up, 3.8 million shares on that day. So that sets you up at about 430, 435 from that gap, and probably would be is acted as a support on the 25th of January, and of course on the 8th and 10th of February, 8th, 9th, 10th of February. And that looks kind of like where you would want to come in. Yeah, 535, 435, 440. Looks like maybe that could be support on this. But anytime you have the devastation off the highs like this did on October 13th, I just cannot buy until I see a decent consolidation. Pretty much all the interest come out, and that is it. Of course, this is one of those stocks that has a lot of gaps down below that could still get filled, so don't get too excited. Let's see if there's anything else on my list. I think this is Heinz. HZNP, is that what it is? Yeah. Kind of interesting on this one. Off 4%, 1370. This is finally back into this gap on this one, and this is where this gapped up. That was October 23rd, 17.2 million shares. HZNP, what's HZNP? Okay. Now we're 1430, yeah, 1430, yeah, 1423. 5.3 million shares, so not a big deal that this thing is bouncing off that, but you do at least have a test in it. We talked about this a little bit over the last couple of days, and that was some of these pharma stocks finally look like they're coming back into some of these previous lows with lighter volume. And we continue to see that. To see if there's anything else on my list for today. That's kind of it. Let's go to some other ones. Again, you can email me at path@tfnn.com. And what else? Oh, I will handle that during the break. Someone's got an email for me here. American Express Company. Of course, looking into this, in fact, let's get a quick quote on this one here. XP. Yeah, 6106. So we're back up into this gap. I just liked the way that this thing kind of moved. We certainly don't have a lot of volume as this thing fills its gap. The 22nd of January, it hammered down with 44 million shares. Yesterday we had, 4.6 million shares today. So far, 3.7 million shares. So probably going to come into that same range. Just not a lot of juice coming in till that gap. And, of course, the heavy volume day down of the 22nd of January. So probably like most financials out here, they tend to be bringing up the rear and not the front of the market. To Beeve Aerospace. This one was breaking out yesterday with lighter volume. I wanted to see how this thing reacted today. And it's off 28 cents at 46.98. 640,000 shares. So what I just liked about this one is it didn't really have a sign of strength the last 2 days. And, of course, today, probably even worse with just 640,000 shares. February 4th had its last major swing high with 1.6 million shares. Kind of tried to go through that with probably the best was 2.6 million shares, but pulled back into trading range on March 2nd. And, of course, on Wednesday, 1.5 million shares. Yesterday, 1.2 million shares. And today, 700,000 shares so far. If you go back and look at a consolidation range that started on the 20th of November and ran through the 1st of December, you're basically back into that area, which kind of looks to me like it's going to be fairly decent resistance levels. What else? Ace Limited, another one coming back into its gap. And what do we have on that? Oh, CB is the symbol. 121.79. Yeah, 121. Yeah, it was 121.77. So we're kind of back sideways into this gap. Another one that blew apart on big volume down, and that was on the 15th of February. We've got a phone call. Not enough time to take it. We'll get to Mike from Ormond Beach. He wants to talk about the spies, I'm told. We'll get into that when we come back. Give me a call, too, like Mike. All I can think of is that Life cereal commercial now. See you on the other side of the break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And if you live around the St. Pete area, I'm going to give a shameless plug to one of our engineers, and that is Stephen. He's starting at one of his low-power radio stations down there on 99.1 FM, and apparently it's going to be old-school funk, contemporary hits, but he's got a low-power radio station certificate, and we'll start broadcasting. Of course, in a digital age. I don't know how that's going to work. Maybe people like to listen to the radio down there in St. Pete. I do not know, but we'll be there on 99.1, so you might check that out if you're around there. Yeah, we'll see. Back to, hopefully, our caller, Mike from Ormond Beach. How you doing today, Mike?
Great, Dave. I got a question on the SPY.
Mm-hmm.
And at what point would you start to think about shorting it?
My thought is right now, I'm not going to have a clear. We had a bunch of charts give indications outside of the S&P, individual stocks, which is what I look at a lot more. But
yeah,
here's
thinking like getting some SDS now.
Well, here's what I'm thinking, or what I would do. We've got quad witching today, right?
Right.
We got Microsoft on Monday.
Okay.
I have no idea what they're going to do. No one does. So we don't know what the product is, if it's just another iPhone, if it's something else, and how that's going to be received. I would say that that's a big enough deal. And, of course, we've got options rollover for Monday and Tuesday. For me, I think a much better shot would be waiting till either Tuesday late in the day or a Wednesday before I would probably plan my next action.
Okay.
And that is just, there's too many news-driven things going on for me. We've got quad witching today. We're starting to get some decent volume with zero movement. Normally, that means that we're going to get a lot of that unwound on Monday and Tuesday and have a little volatility. It could be up. It could be down. I don't know right now. It's very hard to tell. But I'm thinking that, first of all, we got to get through the Apple announcement. We could see big movements up or down in Apple. If it's nothing, if it's kind of something, if it's huge, you never know, right?
Right.
This is one of almost everything is leaked from Apple. This is not, which makes me think maybe it is something that they've been working on for a while. Maybe it's Apple TV. Maybe it's something else. Maybe it's a second version of the watch. This is one time where they've kept it very close to the vest, and I don't know.
Okay.
So I think that's a big enough thing that it could move the NASDAQ, could move the others up or down. Either way, the option rollover is going to be rather big. In fact, if I would just happen to be coming back in from walking the dogs at lunch, and why I almost never have the audio on for CNBC, I just leave it on to see what they're kind of talking about, because normally if they're talking about everything, it's either a high or a low. And popped it on, and one of the bigger option guys says, well, I went to 50% cash today. Of course, this is quad witching. I had to get rid out of a whole bunch of stuff. And that's pretty much the way these guys on Wall Street work, especially in this quad witching thing, and that is that they're going to have to get in and out of a lot of positions. It causes a lot of noise, a lot of misdirection, and pretty much by Tuesday, probably around 2 o'clock, that's going to be over. And at that point, especially into Wednesday, we get a much better view of what's going on. So I just don't think that there's a great deal to be had out here. In fact, the two positions in the daily letter that we had this week were options, and both of them were fairly quick movers. And other than that, I've kind of stayed at a distance. We made some good money on them, but the good money came very quickly. Mm-hmm. So I'm just kind of standing back and waiting for a clear signal.
Okay.
I see what you're looking at in the charts. So
yeah,
there's nothing, there's nothing new in that.
Right.
What I dislike about a market like this is that it can continue all the way up. That I don't hear any real bearish tones out there, which makes me a little nervous. I would be thinking that maybe on the bull side they would have a little bit better. Don't hear anybody really saying the market's going down. But, basically I got harassed yesterday for even suggesting that maybe a commodity could tick down a little, which is normally a warning sign for me too, when, everybody is so into what they're trading that they can't even consider someone saying that they're on the opposite side of one of those trades.
Right.
And right now I kind of see that. I mean, everybody is, as far as any danger. I just don't see it. And you see that in the VIX. Nobody's, we're at 14 here in the VIX,
Right.
which would be another good indication for me to probably not be in an ETF or not be in the equity, but maybe look at options because, I mean, they are darn cheap now.
Yeah.
They're cheaper than buying the ETF or the equity.
Okay.
And you've got a lot more defined risks. So of the stuff I'm looking at with a VIX anywhere south of 16 and at 14 now tells me that I need to be in the option game. And our options that I think we cleared out on Tuesday came with 100% pop. And the ones we did yesterday came with 100% pop. So there is some very missed price options opportunities out there. And that's what I'm going to be looking at probably Monday and Tuesday.
Okay. All right. Well, and also your longer term view. I mean, are you in the camp where you think that we're going to get up to like, possibly 21?
I'm in the camp
and then
that
fail and head back down.
I'm in the camp that I don't know.
Okay.
Everything said a week and a half ago that these stocks went to major levels and major gaps that they should have failed at. They did not.
Right.
Okay. Can they continue that? I went through an entire August that went up once, and I can't remember if it was 2003 or 4 or 5 or something, but it was like no volume all of August, and the market just ticked up higher and higher and higher.
Right.
So what I want is more of a signal than just what we have now.
Right.
I've got plenty of stocks that literally had no volume yesterday.
Mm-hmm.
Another reason why I thought today was going to be kind of, we're up 6 points. No big deal, right? So I wanted to kind of stand back today. I didn't think that there was a lot going on. Got a few more trades off today personally, but there just isn't, there isn't a lot moving in the indexes. So occasionally you can find a stock that's in a short squeeze or with some bad news. But and the one we played yesterday, it was, everybody was short. It's getting toward the end of the week. You better make these things pay off. There wasn't a lot of volume in it. You think it can move up a little bit. You buy an option on it. You can make some decent money compared to the price of the option. So that's what I'm looking at. I need some big moves. And right now, I don't think I could be long. But to be short, I'm going to need a lot more evidence too.
Right. Okay. Well, thanks. I appreciate all your input and advice. Thanks, Dave.
You bet. I guess the best way to describe it would be keep your powder dry. I think there's an opportunity coming. I just do not see it today.
Okay. Thank you.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And a couple of questions came in via email. Of course, you can call me at 877-927-6648. And a question on Tesla, and I think the easiest thing to say is they've got an announcement the 24th or the 26th. And if you were thinking about some kind of play, my guess is it would probably coincide with that announcement or a few days after it. So probably give it a little bit of time. Of course, we've got Apple on Monday. So we got a few things going into the end of the month, and I probably would be willing to stand back on that. Made some good money on Tesla in the past. The last time I was in it, I got stopped out. As they say, stop out early, stop out often. Do not compound your error. But that's it. We've got plenty of time here before the end of the day. We'll look at a few other stocks of interest. You can go ahead and send me some. We've been talking about some of these other stocks. I wanted to see how they were doing. Cabot basically went through its last little pop. COG, isn't it? Yeah. So take a quick look at that. Come on. There we go. It's up a nickel, 22.81 on 4.8 million shares so far. I kind of, again, like I said yesterday, I got a lot of these stocks that are just kind of going over previous highs and no juice. February 8th, this thing had 13 million shares at 22.25. Last couple of days, 6.5 million shares yesterday, and 6.5 million shares. So back on, we're probably going to have about 6.5 million again today. I don't know if there's a whole lot you can read out of it, but a lot of overhead resistance comes back from September 25th on this to October 7th. So I would say that the easy part is over, and we're back into the tough sledding on some of these. CRS is another one, Carpenter Technology Corporation, popping up on it. CRS. This is up 2% today, up 79 cents, 35.46. So you're basically back up to these previous runs, which are the October 16th and December 1st highs in this. You needed some okay volume, and you've got it. So it's back up to this gap. The question is, when you go back to these longer-term gaps, what do you see? And that is a whole lot of gapping going on the way down, and that is where you start getting into the trouble, which is, you bounce off these lows. Can you get back up to these gaps? But man, is there, 1, 2, 3, 4, 5, 6 gaps all the way from, let's call it 3670 to 40, well, let's call it 40.50. But Gapapalooza. And make sure when you're looking at these stocks, bring them back a little bit and see how many of those gaps are sitting on top of it. Got a question to look at DIG. We'll take a quick look at it. It's off 1% today. Like I said, a lot of stocks coming up to these levels. This is at $32.15, off 35 cents today. So far, 340,000 shares. And you're basically going into these gaps, kind of a combination of a couple of gaps from the 7th and the 6th of January. Is that 7th and the 4th, excuse me. Not a lot of volume in those gaps for DIG. So I don't know if you can make a big thing of it other than it is gotten back and probably getting close to filling that gap. Energy is pretty good off the bottom on these. You know, if you didn't already own them, then you're probably looking at this little gap that acted as support not too long ago. And the low of day on that is what? $28.59 on the 8th of this month. And that would be pretty good. But yeah, as close as you could get to that 28.59 might be the next level on just a slight pullback if you're still bullish in this. We talked about EDU, I think, yesterday. FFIV on this one. And FFIV's up 80 cents at 101.73. This one's coming back. Again, a ton of gaps as we come back up in some of these stocks. This went from 135.20 back on July 31st, pretty much in a straight line down to the 11th of February low at 86.03. We've had our first gap back up here, and now we're basically into one of these bigger gaps. It had 1.5 million shares. What do we got? 400,000 shares now, and that really starts to hone in on what I'm seeing in the charts over the last couple of days, and that is the easy sledding is over if you are bullish. You're now running into a lot of these stocks with the high volume down days, in this case, the 9th of December for FFIV on 1.55 billion shares and into it on a third. Never a good sign. And so far, the energy on the way up is not that astounding. To iRobot, a little robot company. I think we looked at that yesterday. Let's look at the IYE because this is another one that's coming into its gap. We'll see how it's doing. IYE's off 0.5%, down 20 cents, $35.61. So we've basically gone to this gap of the 7th of December. This had 1.6 million shares. So far today, we've got, what, just about 1 million shares. So it could be a little bit better than you think. This is not a high volume gap down, but it is in that gap and kind of going a little sideways. So I've already got my list of stocks. I'm going to watch Monday and Tuesday how these things trade around these particular gaps. But not the only stocks out here with decent or big gaps. Let's see. We've got this IYF, which is the financial sector. This has been, of course, the laggard. IYF. Did I type it right? Yeah. Up 50 cents today, $85.06. 424,000 shares so far. So we have popped up in the center of this gap. You actually have two gaps, and these were on the way down. Volumes on those gaps could be, well, let's find the biggest one out here. 1.5 million shares looks like the biggest one on the 7th of January. And, today, what do we have? 424,000 shares. So again, as I said, this is a light volume day. It is a quad options expiration. I'm willing to kind of look past this for a day, but Monday and Tuesday, this is where we need to be looking in the battleground for volume and what they are telling us. Another one, which is the real estate index, the IYR, is another one. We'll look at this when we come back and go into the home stretch. As we speak, we're up 6 points on the S&P cash, 3.37 billion shares on the New York Consolidated Tape.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Of course, we're going into the home stretch. In the next hour, we've got Tom O'Brien, so he'll give us the close down. Probably get a little action as we get into the end of the day. Volume has kind of slowed down here in the last 15 minutes. Normally, you get a little bit more on quad witching in the last 15, 30 minutes of the day. A lot of it's probably over 3.4 billion shares as we go into the home stretch. That's probably going to get you to about 4.4 billion by the end of the day on the New York Consolidated Tape. Like I said, other than some very strategic rifle shots this week, I'm willing to wait until probably Tuesday or Wednesday to get a much clearer view on the longer forecast. But I think we're going to get it in just a few days. Like I said, a lot of these stocks yesterday were hitting previous highs on very light volume. And, we've got a phone call. Doesn't say who we have yet. Why don't you just put him on? We're running out of time. Oh, he's typing away. Who do we have on the line?
Chad Martin.
Thank you. What would you like to talk about today?
The other day on Tom O'Brien's show, I'm a subscriber to your daily letter. Should have held those IBB calls one more day, huh?
Well, you could have picked them back up this morning again.
Yeah, I it was a win. I'm happy. I was just saying.
I saw it at 2:45, and I went back in again. Unfortunately,
Did you really?
Yeah. Unfortunately, with email, it's going to take a good 5 minutes for you to get it, and of course, it didn't last that long. So you knew where I was. You knew where I was fishing, and he's talking about yesterday where we bought the IBB calls when it went down to about 242, and we sold them when they went through about 248. And they went to 245 today and went to 252. I got out when they were across 250 again. But, yeah, there's pretty nice fishing out there occasionally.
Yeah, it was good. What I was calling about was there was a guy that called into Tom O'Brien's show the other day, and he saw that on a 3-minute chart, the VIX spiked down a bunch about 10 minutes before Yellen started talking.
Mm-hmm.
And I wanted to see if that was something that's repeatable or reliable, but I don't have access to a chart that goes back a year that'll show me 3-minute increments or 5-minute increments.
Yeah, and I don't even bother with it. I know some people do. It's just not my cup of tea. I like bigger, longer signals. So the question would be whether somebody actually knew something. Is that what you're trying to figure out?
Yeah.
My guess is, we've talked about it before, is if someone knew something, the people that are going to know about it are the NANEX people, not to be confused with NADEX. But if you think that something's going on and there may be a little hinky business, Eric Hunsader of NADEX, if you just Google Twitter, if you want to email me, I can give you his Twitter feed. But he rats everybody. He rats everybody out. We talked about him either a week or 2 weeks ago, getting a $750,000 award for ratting everybody out for the flash crash. So that guy has every tick, whether and every order ever entered since like 2008. And he's got software in there. You can see whether or not someone was pulling something hinky, and he rats them out on his Twitter feed all the time. It's very hard for the big shots to hide anymore from him. Like we said, one of the good guys. But you can always email me at path@tfnn.com. We are going into a hard break, so thanks very much, and we'll see you Monday. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.